So, I currently have three bank accounts across three separate banking institutions: Bendigo Bank, ING, and Westpac. Bendigo Bank is a medium sized institution and it's quite popular here in my state of Victoria, as Bendigo, the city, is only about 200 kilometres from where I live. ING is strictly an online only bank account, and Westpac is one of the big four banks here in Australia. I only had Bendigo for most of my life, up until this year when I decided to sign up for the other two aforementioned banks. The reason being was the better interest rates. The idea arose from tea room gossip at my supermarket job. I heard there were better interest rates at these two banks. I know, interest rates are garbage. However, it's a good idea to keep some cash on standby. If you have everything in stocks or crypto, and we get a bit of a prolonged dip, you now have less money for the emergencies that occur. Obviously, your purchasing power with money decreases as inflation continues, especially at the rate it is now, but $2,000 in cash is better than investing $2,000 in stocks. It dips to $1,900, and then turns out you need $2,000 for an emergency right then and there. I've kept Bendigo because where I live, they have very convenient in-person locations. I don't know about you, but I hate it when I'm left on hold on the phone for God knows how long. It's just quicker to drive to your local branch and wait in line for some help from the teller there. So that's bank account number one. As for ING, they currently offer interest rates of 1.35%, providing you have a savings account and you have at least 5 transactions per month in your spending account. The balance is above $0, and the total at the end of the month is higher than what it was at the start of the month, which is much better than what's offered at most other banks. And there is no limit to the amount of money this interest rate applies to. Now, this will make sense in a moment. My third bank account is my Big Four bank account, Westpac. Now, Westpac offers a similar setup as ING. You have a spending account that you need to complete at least 5 transactions on per month, and then you have the savings account, which accumulates the savings. The differentiating factor here is that Westpac offers up to a whopping 3% interest rate. Yeah, 3%. Not too impressive, is it? But compared to other banks, it is. Now, there are specific conditions that you need to meet to get this. However, you need to be between the ages of 18 and 29. You need to have 5 resulted transactions, resulted meaning it's not pending, per month, as mentioned before. With ING, the balance needs to be higher than what it was in the previous month. That excludes the interest payments, meaning you actually need to put more of your money into that account per month. I only put like $10 a month. And this only applies up to $30,000. So, if you somehow have $100,000 you want to keep as cash, you'll only get majority of this interest rate on the first $30,000. You will still get some interest on the other $70,000, but it'll only accrue at an interest rate of about 0.4%. This is why I have ING. The 1.35% interest rate doesn't have a cap on it. So I keep around $30,000 of my cash in Westpac, and then the rest goes into ING, as ING gives a higher interest rate for the amounts above $30,000. So that's the reason I currently have 3 bank accounts, mainly for convenience and taking advantage of the interest rates they currently offer. Maybe this has given you an idea to see what other interest rates are out there. That is all.